Life Insurance Corporation of India. You know it as LIC. For decades, it's been this household name, right? A symbol of safety, of trust. But ever since it hit the stock market, it's become one of the biggest puzzles on Wall Street. So what's the deal? Is this sleeping giant finally waking up, or is it just a gigaflop? Let's get into it.
This isn't just some abstract financial debate. It's a real-life dilemma for tons of people, and this Reddit post just sums it up perfectly. Millions of regular investors, just like this person, jumped into the LIC IPO, and a lot of them are now asking that exact same question. Do I hold on for the comeback, or is it time to cut my losses? That's the heart of the story we're unpacking today. To really get the drama here, you have to understand the sheer scale we're talking about. The LIC IPO wasn't just big, it was the largest in Indian history. It raised a colossal 21,000 crore rupees. The hype was absolutely off the charts. It was sold as this once-in-a-generation chance for everyday folks to own a piece of a national treasure. But then reality hit, and it hit hard. On its very first day of trading, the stock closed down over 8%. Think about that. The biggest IPO in history immediately started losing money for all those new investors. That one number set the stage for this huge conflict we're still seeing today, the incredible promise of LIC versus its actual performance. So to figure out why the stock has been such a disappointment, we first have to go back and understand why everyone was so excited in the first place. You see, for over 65 years, LIC wasn't just an insurance company. It was pretty much the insurance company in India. And that dominance is, well, it's staggering. I mean, even today, after 2 whole decades of private companies jumping into the game, LIC still controls almost 2/3 of the entire market. It's not just a leader, it's in a completely different league. It just dwarfs all its rivals put together. And if you want a number that really shows you this scale, you got to look at something called embedded value. It's basically a guess of all the future profits the company thinks it'll make from the policies it's already sold. And LIC's number here is just bonkers. Over 5 lakh crore rupees. That's more than 15 times bigger than its closest competitors. Combined, the scale is just mind-blowing. This whole empire was built on some seriously powerful strengths. A brand that's basically a synonym for trust. A literal army of over 1.3 million agents in every nook and cranny of the country, a massive physical network of branches, and, maybe most importantly, a nearly perfect track record of actually paying out claims. This was the foundation that made LIC look like the safest bet you could possibly make. So this brings us to the big, obvious question, right? If all of that is true, if LIC is this powerful, trusted, unshakable giant, what on earth went wrong? Why didn't the stock live up to the legacy? Well, the answer is that while LIC was built like this giant, impenetrable fortress, the world outside its walls was changing fast. And the very things that made it a giant also made it slow, kind of clumsy, when it came to dealing with new competition. And this right here really shows you the core problem. On one hand, you have the brand, the most trusted brand. On the other, you have the financial reality. Just look at its non-performing assets, basically the bad loans in its huge investment portfolio. At a shocking 7.78%, it was over 100 times higher than its nimbler private rivals. For any serious investor, that is a massive red flag. And at the very same time, that market share that looked so unshakable, it was actually slowly shrinking. Yeah, they were still the biggest player by a mile, but their slice of the pie had been getting consistently smaller for years, as private companies just kept chipping away at their kingdom. And you can add a few other problems to that pile. Their investment returns weren't great compared to competitors, and their product lineup was full of these old-school, low-margin plans instead of the more profitable stuff that modern customers actually wanted. It was pretty clear the giant had some serious weak spots. But, and this is a big but, this is where the story takes a really interesting turn. Facing all these problems head-on, LIC's management decided it was time for a major shift. It was time to stop just being big and start focusing on being profitable. This quote from LIC's chairperson, Siddhartha Mohanty, really says it all. The new game plan wasn't just about being the biggest anymore. It's about being the smartest, the most efficient, and the most profitable. This was a huge, deliberate pivot for the whole company. And you know what? The results of this new strategy are already starting to pop up. In the first quarter of fiscal year 25, their profit after tax jumped by almost 10%. And then bam, sales of their more profitable, non-participating products, the exact area where they used to be weak, exploded by a massive 165%. And what's really fascinating here is that this new focus on profits didn't actually hurt their dominance. In fact, their market share actually ticked back up a little. It seems the giant is proving it can grow its profits and regain ground at the same time.
Okay, so this brings us right back to the start, to that investor's dilemma. We've seen the old, lumbering giant, and now we're seeing this new, more agile version starting to emerge. So how in the world do you decide what to do with the stock today? Let's break down both sides of the coin.
The case against LIC, the bear case, is pretty clear, right? A long history of losing market share, those high NPAs, and really tough competition. But the bull case is suddenly looking just as strong. Market share is recovering, that pivot to profitability is showing real tangible results, and maybe the biggest argument for the bulls comes down to one word: valuation. A lot of analysts don't think the stock is just plain cheap. And honestly, it's that idea of valuation that's making a lot of smart people take a second look. The argument is that after all that initial IPO disappointment, the market basically overreacted, and it pushed LIC stock down to a price that might actually be a bargain compared to what the company is really worth. And some analysts have even put a hard number on it. Take this analysis from Simply Wall Street, for example. Based on their models of future cash flow, they estimate LIC's fair value is somewhere over 1,200 rupees a share. Now, if they're even close to right, that means the stock isn't just a little cheap, it's significantly undervalued. And that is a powerful, powerful argument for people like our Reddit user who are hoping the price will finally bounce back. And so that leaves us with the final, defining question for LIC's future. Its entire history, its whole identity, was built on being this massive, unshakable, safe institution. But to actually succeed in this new era and deliver real value to its shareholders, it seems the elephant has to learn how to dance. The billion-dollar question is, can it?